Elon Musk actually came out and congratulated them. He's like, this is a pretty big, impressive milestone. He said, congrats. Yeah, I don't think I've seen a company have a higher market cap at its IPO than Coinbase. I don't think there's been any company out there in the last couple of years that have had a market cap of like $100 billion. It makes it one of the top 100 largest companies, I think, in the US with its IPO. Yeah, it's going to be immediately in the top 100 largest companies. Yeah. Welcome back to my show. We go live every day at 9 a.m. Eastern time, talking about the stock market, what's going on in financial news. I don't know if you guys have seen, but Coinbase, you've probably seen by now. If you haven't, I don't know where you've been, but Coinbase had its market debut, and really this is a huge event for crypto in general. There are some risks going forward, but this is a massive event for crypto. It gives it a lot of validity in the minds of institutional investors and in the minds of people who might have been unsure about crypto before. Now a lot of these people are seeing Coinbase, seeing the market cap, and now people are going to want to invest in crypto in some way, but they don't want to invest directly into, let's say, Bitcoin or Ethereum, and they don't want to do that. They can invest now directly into Coinbase, which is the largest company by far in the crypto space that it's going to go public. It is by far the largest crypto company that's going to be going, that is public. And this is the world's second largest digital asset exchange by trading volume, according to CoinMarketCap. And it's really just going to legitimize a lot about cryptocurrency in general. It's going to be immediately in the top 100 most valuable companies in the US, and it shows how big the industry, how big crypto is, and how fast it's growing. Because Coinbase has grown extremely fast from private rounds of funding just a couple of years ago. Now they're valued, $100 billion or more. Pretty crazy. But on top of this, investing in Coinbase, a lot of people are wondering, should they invest? Should they not invest? But really, investing in Coinbase right now, there are really two main risks, and there's a lot of reasons to invest in it as well. So let's go over the risks. The two risks that I see are, first of all, which is volatility. It's really tied a lot to what's going on with Bitcoin and the price of Bitcoin. If Bitcoin's going up, more people are investing in crypto and Bitcoin, Ethereum, Litecoin, all those different coins. Well, then Coinbase is going to generate more revenue. And so really it's not directly tied to the price of Bitcoin, but a lot of the revenues are correlated to the price of Bitcoin, how many people are investing. So if Bitcoin sees a massive drop off, it tanks, well then Coinbase will probably suffer as well. Their revenues will suffer as well. Past quarter though, they did amazing. They had $1.8 billion in revenue in the first quarter of 2021. It was an 844% year over year increase. So obviously you could see about 844% year over year increase in terms of revenue. Bitcoin did about the same thing. Bitcoin was up around 900%. So same thing in terms of Bitcoin and Coinbase's revenue and their numbers. So not exactly, but it's pretty similar. Another risk to investing in Coinbase. So first of all, they have a bunch of risks on their filings about the price and the fluctuations of Bitcoin and cryptocurrency. Another risk could be with regulation, because earlier this year, Janet Yellen warned in her confirmation hearing that Bitcoin and other cryptocurrencies are mainly used for illicit activity, and that the government needs to curtail this use. They need to put regulations in place to protect against it, because that's what they're worried about. So there could be government regulations put into place that could really not like hurt Bitcoin and Coinbase, but it could slow them down pretty significantly. So those are the two risks. But some things to like about investing in Coinbase is that every single ETF out there that wants exposure to Bitcoin, they're probably going to invest in one of two things. Now they have Coinbase, and the other one, which a lot of them have already invested in, is Grayscale Bitcoin Trust, GBTC. So now I think any ETF that is looking for some sort of crypto exposure, they're all going to be buying up Coinbase. Doesn't matter if we're talking about Ark Invest ETFs or ETFs that are based just high growth ETFs. I think any any ETF that wants exposure to crypto, to Bitcoin, I think they're going to put their money into Coinbase because it is the largest crypto company out there that is public, and it's really a giant. So a couple of things to really like about it. I think there's going to be a lot of money pouring into Coinbase just because it doesn't just represent like an exchange, but it represents just cryptocurrency in general. And anyone who wants any exposure to crypto, they're going to be pouring money, I believe, into Coinbase. But speaking of companies that have been doing extremely well, I don't know if you guys have seen, but NIO, they recently hit their 100,000 vehicle milestone. I talked about it in a video the other day. They hit the 100,000th vehicle milestone, which is a really big milestone when you're talking about electric vehicle companies and in terms of startups that have grown very rapidly. This is just a big, big milestone. And Tesla and Elon Musk have not been, the most excited about NIO. They've been a little hard on. He's been a little hard on them because they are competition, and he's put them down in the past. But when NIO announced that they had produced 100,000 electric vehicles, Elon Musk actually came out and congratulated them. He's like, "This is a pretty big, impressive milestone." He said, "Congrats to NIO, tough milestone to reach." So pretty exciting to see that. NIO, it took them about 3 years, a little around 3 years to reach that 100,000 vehicle mark, but about 20,000 of these vehicles came in the last quarter alone. So 1/5 of all the vehicles they've ever delivered has come in the last quarter, which is massive. And next quarter, Q2 of 2021, they're projecting to deliver even more than in Q1. Q1, they had a couple of issues with chip shortages, holidays in China. So they had a lot of, time when the factory either wasn't running, was shut down, just some issues there. So Q2, they're projecting even more, and they're growing very, very rapidly. Right now, NIO really positions themselves as a luxury EV company. The average price per vehicle is around $65,410 per vehicle. That's the average price they sold their total 100,000 vehicles. And what I like about NIO is their battery as a service subscription, that model, because every time someone purchases a vehicle with that battery as a service package, well, that means it's recurring revenue for the company for years and years to come. That's great. On top of this, they're also doing more subscription services for software like autonomous driving and other things like that. So right now, that's one of the things I really like about NIO is that they're different than every other electric vehicle company out there because you can buy the car without the battery and then pay for a subscription service to NIO to have, to use their battery swapping stations, to just be able to change out your battery. And I really, really like this battery as a service model because it's recurring revenue for the company for years and years to come. More people who use it, more money that's guaranteed that NIO will make every single year. I don't know if you guys have seen with AMC, but a Chinese investor that had controlling interest in AMC that actually took the company public back in, I believe, 2013. Yeah, I believe they took AMC public back in 2013. But this company, they sold off over $220 million in stock just the other day. The company that sold off was Wanda America Entertainment, Inc., which is a unit of Chinese company Wanda Group. They sold about 15.6 million shares of AMC between February 1st, March 19th, and March 20th, according to a filing with the SEC. So total, they have about 30.5 million shares left, but they used to have a controlling stake in AMC. Now they no longer have a controlling stake. They have less than 10%. They only have 6.8% of the company, when before they had basically the entire company. They're the ones who took it public. They had a majority interest in AMC. No longer they have this. And a lot of people, it's caused some people to get worried because right now this is like an inflection point for AMC, for movie theaters, and for a lot of these recovery stocks, especially AMC and movie theaters. They're wondering, why is this company selling major interest in the stock now? Why didn't they sell it a while ago when right now looks to be like a turning point? So a lot of people are worried about that. AMC, they had bought AMC for $2.6 billion back in 2012. They had about 80% when when they took the company public in 2013. So they've gone from owning 100% of the company in 2012, now down to only 6.8%. Caused a lot of people to worry. And right now, it just concerns some people because this is a turning point for these cinemas, for movie theaters, and a lot of these stocks, they're at a turning point where things are actually starting to look a lot better now. So people are wondering, why now? Why are they selling this? And really, it's just because they probably see better opportunities out there. They want to invest in other companies. Still, even though movie theaters are turning around, they've still been struggling, and they're not going to get to pre-pandemic levels, at least until probably 2023, early 2023. So we'll have to wait and see what happens there. But this is a pretty big announcement, and it did drive AMC's stock price lower. Right now with AMC, I really like the company. I think with Godzilla vs. Kong having a record-breaking weekend, I think with vaccinations increasing, I think with the economy reopening, I think there's a lot to like about AMC. I think they really hit a turning point. I think we're going to continue to see them do very, very well over the next couple of months and next couple of years. Speaking of other stocks that were in, that saw that massive short squeeze, GameStop. And GameStop investor Melvin Capital recently came out and reported that it lost 49% of its investments in the first quarter of 2021. GameStop was less than $5 about a year ago. All at one point, they went over $400 a share. Melvin Capital was a hedge fund at the center of this massive short squeeze with GameStop, retail investors versus institutional investors. Melvin Capital was at the center of all of this. And a person familiar with the matter said the other day that during the first 3 months of 2021, Melvin Capital lost 49% on its investments, which is massive. They had to be basically bailed out by a couple of other investment companies, a couple of other people. Hedge fund managers Stephen Cohen, who trained Plotkin, and Kenneth Griffin stepped in January, and they added $2.75 billion in new funds to the firm when they were struggling with everything with GameStop, because essentially they shorted GameStop. Everyone knows this. They shorted GameStop. They thought it was going to tank, but it basically 100x from where it was, from like $5 a share to over $400 a share. So massive growth. They lost a lot of money. Still, they have not, they can't recover fully from where they were at just 3 months ago. So it's going to be a long process for them. A lot of people are actually pretty happy about this because it's, retail investors versus institutions. But I thought it was pretty interesting to see the exact numbers. They lost 49% of their investments, which is really unheard of in hedge funds, investment companies, things like that. Now, I don't know if you guys have seen, but there's been a lot of drama with Alibaba, Chinese government. And a couple months back, we saw a big thing with Alibaba's founder, Jack Ma, Chinese government. There was a lot of tension there. And just recently, China now announced that they're slapping Alibaba with $2.8 billion fine as a result of an anti-monopoly probe. So essentially what happened is Alibaba, they were being investigated because they had some sort of policy or practice that really only allowed merchants to choose between doing business on Alibaba or doing business with one of their competitors. They didn't really allow them, didn't give them the opportunity to do business with both, with, Alibaba and another company. They really restricted it, so some business had to choose either being on Alibaba or, let's say, JD.com or another competitor. And as a result of this, a lot of people weren't happy. This policy came out and people were not happy because they said it restricted, it just restricted growth in the Chinese e-commerce space, and it wasn't really a policy that the government wanted. So what happened is they fined them about $2.8 billion, which is about 4% of Alibaba's 2019 revenue, and regulators said that Alibaba will have to file self-examination and compliance reports to the SAMR for the next 3 years, and this is all as a result of Alibaba's policy, which is called Choose One policy, which essentially was giving Alibaba, they said, an unfair advantage in terms of, between them and their competition like JD.com and other companies. So right now, still, I don't think Alibaba's in any trouble at all. This is actually probably one of the result of this really wasn't anything too bad. $2.8 billion for them is only about 4% of their revenue. It's really not a lot at all. And I think this is probably one of the better case scenarios that we could have seen as a result of this. I'm still pretty bullish on Alibaba. The one thing with investing in any Chinese company is Chinese government regulations, as we can see right here. So that's always the issue and the risk of investing in a Chinese company. But Alibaba is in so many different aspects. They own a major portion of Ant Financial Group, which now officially has confirmed that they will be, moving forward with their IPO. They own a lot of companies, and it's one of the largest. It is the largest e-commerce company in China. So I'm pretty bullish on it. I think this was probably one of the best case scenarios, one of the best results of what could have happened. So not too worried about it. Now on to Ark Invest. They recently announced their space exploration ETF, stock ticker symbol ARKX, and one ETF analyst, he said that, you have to be a little cautious if you're investing in Ark Invest, like Ark's space exploration ETF, because a lot of people don't really understand it, because they don't quite understand what it invests in. He said a lot of people who see space exploration ETF would assume it's just in space companies. But no, Ark Invest, they have 5 different categories of investments, and a lot of them are not related to space. Like, if you look at them, you would think they're not related to space at all. Like, they invest in Netflix. They invest in JD.com. They invest in agricultural company Deere, like John Deere and tractors. And people just would think that those companies, why are they in a space exploration ETF? Why is there an agriculture company like Deere and a company like Netflix in a space exploration ETF? And they said, really, what people need to realize is that Ark Invest in this space exploration ETF is not just a space ETF. Even though it's called that, really, you have to look into it and realize that any company that benefits from any activity in space is a company that Ark Invest and this ARKX ETF will put money into. So if a company benefits from 5G or from, satellites, well, then Ark Invest will put money in, they could put money into it. It's not just about companies that do business, in space or are, satellite companies, 5G. It's not just about that. It's about any company that benefits from aerospace activities or technology. Those are companies that are included in this ETF. So you just have to remember that, because you probably wouldn't think that like John Deere, like Deere or JD.com or Netflix would be included, but they are. So just make sure to do your research, look into that, and look at the 5 different categories of stocks that they invest in the ARKX ETF. This includes space companies, but it also includes, let's say companies like Atlas Crest Investment Corp, ACIC, like companies that are working on being like the Uber or Lyft of the sky. So like Archer Aviation, it does invest in all of those, but it also invests in just agricultural companies, technology companies, and other things like that. Now on to Blackstone. So Blackstone's Byron Wayne, he predicts that there's a correction is going to happen in 2021 in the stock market very soon, before the market, ends up having a high at the year end. So he thinks between now and the end of the year, we're going to see a fairly significant correction followed by massive growth, and we're going to end off higher than we are now. But between the, now and December 31st, we're going to see a big correction. So essentially, Blackstone's Byron Wen on CNBC, he projected that Wall Street will be hit with another big correction before the bull run resumes later this year. He said essentially the main reasons why is that inflation will shoot up faster than most people are forecasting. He thinks inflation is going to rise a lot faster, and he thinks that that's going to drive the Federal Reserve to essentially tighten monetary policy and likely lead to a market sell-off. Whenever we see inflation, go up, a lot of time there's a lot of pressure on the stock market. We see the stock market go down. A lot of times they're like inverse relationship between them. But right now, he said the market is fully priced and there is the danger of inflation. So if we see inflation increase, which he believes we will see it increase faster than expected. Well, then that's going to cause the stock market to have a correction. It's not going to be, a crash or a long-term thing, but he says short-term, we might see a correction. Could present a lot of great buying opportunities for investors. So make sure to keep some money on the side. But he thinks by the end of the year, we will see the market continue up higher than it is now. So either way, smart practice is to always keep a significant amount of money on the side. So you could always invest in, when there's opportunities, when things crash, you have money to pour into the market because long term, the market, over decades and decades, always recovers, always will continue up higher. So it's just when you see these opportunities, when there's these dips, there's these corrections, you could use money you have on the side to invest, take advantage of them for the long term. So something just to keep an eye out on. Now into Joe Biden. A lot of people have been talking about Joe Biden, the $2 trillion infrastructure bill, and right now Joe Biden says he is prepared to negotiate on the size, the scope of the infrastructure plan, how to pay for it, and this is really great news. So this is particularly going to benefit companies like Star Peak Energy Transition Corp, companies like Solar Edge, and companies that are integrated directly into clean energy infrastructure and things like that. So right now, Joe Biden, he says he is prepared to negotiate on the size and scope of the bill. The problem is a lot of Republicans and a lot of people in Congress are not happy about how much is being spent. They said $2 trillion is simply too much. We don't need to spend that much money. And they want to make sure that it's called an infrastructure bill so that the money in this package is going to be specifically for infrastructure, that it shouldn't be for things unrelated to infrastructure. And they said really they have to determine what qualifies as infrastructure and what doesn't qualify. So they said that's what they're going to be talking about. And for example, Mitch McConnell, he said that there are policies and things in this bill that really are not related to infrastructure. So he said they want to make sure that everything in the bill will be labeled and actually is infrastructure, and they think that they're going to agree on probably a much lower price than $2 trillion. So we'll have to wait and see what happens here. But this is great news for energy storage stocks, for infrastructure stocks, because now we know that Joe Biden is, willing to come down, modify the bill, and that's a great sign because Republicans want to spend less than Democrats, so probably they can meet in the middle on that, determine how much they want to spend and what specific aspects should be included in it. I don't know if you've seen, but one of my favorite stocks out there, DraftKings, they recently had a big announcement where they expand their agreement with the PGA Tour to include Arizona. And right now, DraftKings is acting very fast after the state of Arizona passed sports betting legislation by expanding their existing commercial relationship with the PGA Tour to provide market access for retail and mobile sports betting in the state of Arizona. We're seeing more and more states continue to legalize sports betting. New York is one of the big ones that's on the list to be legalized, probably this year or early in 2022. And so as more and more states are legalizing sports betting, DraftKings is having a larger and larger market that they're able to capture, a larger total addressable market, and they're going to continue to grow and expand. They have had a great year in 2020 in terms of revenue, in terms of growth. I think 2021 and 2022 could be even better. So as part of this agreement, the PGA Tour and DraftKings have also announced plans to operate a premium retail sports book at TPC Scottsdale, which is one of the big events on the PGA Tour. And they said this is where fans can gather year-round to place wagers, watch sports, and enjoy food and beverage options. So DraftKings is already the official daily fantasy game and official betting operator of the PGA Tour, but now just expanding and integrating this into Arizona because Arizona legalized sports betting. That is a great situation for DraftKings. In addition to Arizona, like I said, we have New York, which is very close. They've been in a lot of talks there, and also getting even closer is states like Maryland. So we'll probably see Maryland be legalized before the start of the season for the NFL. And right now, DraftKings is killing it. They have partnerships with the UFC. They have partnerships with the NFL, PGA Tour. They're integrated in dozens of U.S. states. They already have deals in Canada, and I think they're on track to be a major winner over the next couple of years. And I wouldn't want to be a person, I want to make sure I own this stock, and I wouldn't want to miss out on this opportunity. And lastly, another stock that has been making major moves lately is Palantir. So Palantir recently had a demo day where they talked about their commercial aspects of their business. They have a lot of government contracts, but they've been pushing really heavily into increasing their commercial business, not just on government contracts. They want to make sure they have contracts with large institutions, Fortune 500 companies, things like that. And now Palantir is continuing its push into two different industries, which are life sciences and into institutions as well. So they're pushing more so into doing work with businesses like Merck and other companies rather than just focusing on the government contracts. So they already have major government contracts with the U.S. And one thing in particular is they only do business with companies that are with governments that are either the U.S. government or allies of the U.S. government. They don't work with adversaries, which is something to really like about this company, especially with, always political tensions and things like that. The U.S. knows that they could trust Palantir, and they already have major contracts with them, between aerospace contracts, between a lot of different organizations in the government. So Palantir recently, they announced about a $90 million contract with a pretty big organization, a pretty big government organization. In addition to this, we're seeing that data analytics is becoming more and more important in the sciences, with hospitals, with the life sciences like Merck and other companies in that area. And recently, Microsoft, they announced that they spent $19.7 billion, their second largest acquisition ever, on acquiring a company called Nuance, which is an AI and voice communications company for, to help with their cloud and software business. So obviously we're seeing that data analytics in the healthcare space is becoming more and more important, and Palantir is pushing more so now than ever into getting more contracts in this space. So Ben Amor, a lead Palantir healthcare engineer, said the other day that we're very excited to share the recent work we have been doing with our life sciences customers, such as the National Institutes of Health, global pharmaceutical companies, and the UK's National Health Service. And he said that they have been pushing heavily into this space, and they already have big contracts with the Department of Health and Human Services. They have contracts in the UK with the government, but now they're starting to push more so into the commercial aspects of this with companies like Merck and other healthcare companies. So we'll continue to see what happens here. Hopefully they sign some pretty big contracts, shortly in the healthcare space. We need to see this because Palantir is valued at over $40 billion. So having some contracts in the commercial space will be very, very important for them. They're right now, government contracts make up a majority of their business, so we need to see them start to expand even more so. But according to healthcare engineers at Palantir and people at the company, they said this is their next big push in terms of commercial companies. So exciting to see what happens there, but that's really all I got for you guys today. Hope you enjoyed today's video. Don't forget to get 4 free stocks valued up to $1,600 when you download the Wrubel investing app using the link down below. I hope you enjoyed, and I'll see you guys in the next episode.